Good morning and welcome to Stock Market Today. It's great to be back in the saddle on Monday, July 8th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at Dan Russo _CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today so you can sign up for a free email to follow along with this show. Get daily stock ideas for you to consider in your inbox every trading day before the market opens. So diving right back in, and for me, diving back in after 2 weeks away, I was on my honeymoon in Italy. U.S. equities finished mostly lower in Friday's trading, though well off the morning lows. The June payrolls report released on Friday morning came in better than expected and lowered the odds of a greater than 25 basis point rate cut by the Federal Reserve at the July meeting. Healthcare, materials, and industrials were underperformers. Financials, comm services, discretionary, and energy outperformed. Treasuries were under pressure across the curve with the 10-year yield moving back above 2%. The dollar saw gains versus the yen and the euro. Dollar has seen a little bit of a consolidation of late. Gold finished down 1.5%. WTI crude up 30 basis points, and I will note that trading was very light on Friday following the 4th of July holiday here in the U.S. So again, your outperformers, fins, telecom, discretionary and energy, healthcare, REITs, materials underperform. As we get to the desk this morning, futures are down 20 basis points after finishing higher last week. Asian equities were pretty weak overnight. China, the standout to the downside, falling by more than 2.5%. European markets are mostly weaker, though the pullback is fairly modest. Treasuries are slightly stronger. Dollar is little changed. Gold is up 50 basis points, and WTI crude is weaker to the tune of about 20 basis points here this morning. As we dig in now, new highs for the week. S&P 500 new weekly closing high on Friday. Support is now in the 2,900 to 2,950 zone. No real price-based resistance at all-time highs. RSI confirms the breakout in price. This is something that I had been talking about ad nauseum before heading away, was that we wanted to see this RSI shift into bullish ranges, and that appears to have happened. Now, the all-time high produced an overbought condition for the RSI, but more importantly, notice what happened on this little dip here. On this dip back down towards 2,900 about a week and a half ago, RSI stayed firmly above 50. That is the type of shift we're looking for when we talk about wanting to see a shift into bullish ranges to get a momentum confirmation to price. It is playing out. Now what we'd like to see is Chaikin money flow to get into gear. It's currently neutral. It's been bobbing and weaving above and below the zero line, currently slightly below after getting slightly above. Pretty similar dynamic to what we were talking about before I went away. So we'd love to see Chaikin money flow get in gear here, but the way the evidence does point to the trend being higher. Market is above the rising 200-day moving average. As we dig in now, what are we talking about in our note today to Chaikin Analytics clients? Your market in a minute. S&P 500 reaches a new weekly high. 10-year yield moves higher after the June payrolls report. Again, that payroll report kind of dampening deeper rate cut expectations. Market's still fully expecting a 25 basis point cut at the next meeting, but there was some chatter about a 50 basis point cut. I think that could be off the table now with this payroll report from June. Further weakness in the dollar could help commodities. Dollar's been under pressure but remains in a consolidation. Insurance remains a leading industry group. We'll take a look at that a little bit later in the show, and futures do point, as I said, to a lower open here today. Now, for the major indices, let's take a look at the power bars. Power bars for the Dow, S&P, NASDAQ, and small caps are all skewed firmly to the bullish side, for the most part by greater than 2 to 1. 9 bulls to 4 bears for the Dow. S&P 500, 138 bulls to 60 bears. NASDAQ, slight underperformer on the day. 29 bullish or very bullish stocks, 12 bearish or very bearish stocks in that group. Small caps were an outperformer on the day, bucking the trend. 607 bulls, 308 bears, up 24 basis points on Friday. Now, bonds down tick, sending yields lower. The 10-year yield got below 2%, and now it's rallied back. Remember, there was support at that 2.05% level. Cracked below it, now rallied back after producing an oversold condition. We'll take a look at that. According to the Chaikin Power Bar, small cap stocks and large cap stocks are bullish. Major markets across the board beyond what we're looking at here, however, are mixed. Our stock of the day, taking a look at a name to potentially consider. It's based on our power gauge rating and auto-generated by our algorithm. And today's stock is Comtech Telecom, telecommunications equipment company, closed at $27.99 on Friday, down 1.7%. Chaikin power gauge rating for Comtech is very bullish due to very attractive financial metrics and positive expert activity. Stock does have some weak earnings performance, but when we roll up the 20 factors, 5 in each of these 4 categories, we come out with a very bullish rating. So now, very bullish stock, strong trend, strong industry group, type of name we want to consider on the long side of the portfolio. So let's run through the analysis. Are the market and model in agreement? I would say yes, they are. Here's your bullish or very bullish rating in place since June. And shortly thereafter, stock starts to outperform the market. Dynamic duo in gear, market and model are in agreement. Very bullish stock, outperforming the market. Currently closer to oversold than it is to overbought. Chaikin money flow is bullish. Stock is above the rising long-term trend line. We've had a gap up in earnings following an earnings report in early June. And we noticed that 1, 2, 3, 4, all 4 of the last 4 earnings reports have been positive surprises. Stock is now moving higher. This is the type of name we want to consider on the long side of the portfolio. CMTL looks compelling here. You can see the breakout level above $26. I think as long as you're above that mark, you want to consider a stock like this in the long side of your portfolio. Take a look at ticker symbol CMTL, Comtech Telecom, here today. Sector tracker now, looking at the movement of the major sectors over the last 5 days. All but one are positive over the last 5 days. And the one is I come back after 2 weeks and I see energy still near the bottom of the list. When I looked at the power bars for the major sectors, energy was still at the bottom of the list. Now, at the top of the list is real estate. Wouldn't be surprised to see some profit taking there, however, with rates backing up. Tech at the top, near the top. We talk about this a lot. We want to see tech outperform. Highest weight in the S&P 500. We want to see tech doing well if we're bullish on the equity market. Comms and staples round out the top 4. Now, middle of the road financials. Had a good day on Friday, obviously, with rates backing up. Discretionary and utilities. Utilities, same boat as real estate. If rates do move higher here in the near term, would expect utilities to be under pressure. Rounding out the bottom, healthcare, materials, industrials, and as we said, energy only grouped lower over the last 5 days. Our industry in focus today is innovative technology services. Currently, 23 bullish or very bullish stocks for 15 bearish or very bearish stocks. Over the past 6 months, this subsector has outperformed the S&P 500 by 7.86%. And the power bar, as I just mentioned, is strong, and that's a measure of future potential, more bullish than bearish stocks. It's currently ranked number 13 of 21 subsectors that we look at, but here we have tech sector, and within there, we've got a select group of names that have been doing well. So some of the indicative stocks there, Insight Enterprises, ticker symbol NSIT, EBIX Inc., EBIX, and J2 Global, JCOM, JCOM, all have very bullish Chaikin power gauge ratings. So those are kind of stocks to consider. Again, when we walk through the process and we think about the types of stocks we want to own, what do we want to own? We want to own leading stocks with bullish or very bullish power gauge ratings in leading areas of the market when those stocks are at or near oversold levels with bullish money flow. That's the process. But let's take a look at the sector now, or the industry group. This is XITK, the ETF that tracks the innovative tech services group that we just mentioned. It does have a bullish Chaikin power gauge ETF rating. There's your power bar, 23 to 15 bulls to bears. And what we can see is that we've been on that bullish rating for the most part since January, and the group has been outperforming since the January timeframe. Now, kind of middle of the road on the overbought, oversold indicator, and I don't love this negative money flow as we're up here near the highs. But if we take away to the evidence approach, odds favor continued outperformance, but this is something to keep an eye on. Fund is above the rising long-term trend line. So as you're looking for ideas, long ideas in the equity market, you can look within this ETF, isolate the strongest names, find them when they're oversold, and those are names to consider owning for the next 3 to 6 months. XITK, it's an area to do some work here in the early goings this week. Taking a look at what's trending now, Friday's gainers and losers, our S&P 500 movers and shakers. Earlier in the week, Jefferies had earnings, stock higher by 3.38% on Friday. JW Nordstrom, no real news ahead of Friday's trading, but they did get a positive mention in Barron's over the weekend, calling out their dividend yields. Concho, FTC, okay for a deal, sends that stock higher by about 2%. Silicon Valley Bank, SIVB, up 2% with that back up in rates. And FANG, FANG, Diamondback Energy, no real news there, but energy was an outperforming sector on Friday. On the loser side of the board, not a ton of news. EA down 4.6%. Didn't see a lot of news there to drive trading. IPG, same story. Regeneron had a PDUFA. Stock down 3.5%. Nectar, NKTR, bullish rating. No real news, down 3% on the day. And then ROK has a very bearish rating, down nearly 3% on the day on Friday. Nothing company specific that I saw there, but what I will point out is that within Chaikin Analytics, the stock did trigger two, not one, but two sell signals here today. So take a look at that name, which has a very bearish rating, as a potential bearish idea. Now, diving right in. Small continues to lag large. This has been a theme. We've been on it for a while, and as I come back, that theme still seems to be in place. We're looking at the IWM, the iShares Russell 2000 ETF, relative to the Spider S&P 500 ETF. So a good proxy for how small is performing relative to large, and we can see a clear downtrend here below the 200-day moving average. And what's interesting to me is that downtrend is confirmed by momentum as the RSI is in bearish ranges. Now, kind of piques my interest a little bit that this most recent leg lower didn't produce an oversold condition. Maybe we start to see a bit of a stabilization, but from a trend, we need to see that stabilization first. We need more time. We need to see more evidence that the trend is likely changing. We just don't have it yet. And when we look at IWM on an absolute basis, we can see some solid resistance here at the 160 mark. So continue to favor large caps over small caps for equity positioning based on this analysis here today. 10-year yield backs up. Is there more to come? I mean, truthfully, we don't know, but odds favor slightly more backing up in the 10-year yield. Here's the yield. You can see the steady downtrend. We've been all over this call. Yield is below the declining 50-day moving average, below the declining 200-day moving average. Look at the 50-day actually accelerating to the downside. Now, we broke through this support zone here at 2.05%, and then we backed up. Small positive divergence here could be the sign, early goings of a trend change, but again, too early. We need more evidence. Am I open to the idea of a further backup in yields? Absolutely I am, just given how oversold we had gotten. But this trend is still down. Path of least resistance remains lower for yields here from a trend perspective, but we would not be surprised to see a bit of a backup in the near term. Now, one of the groups that does look compelling to me is insurance. I'm highlighting this as a key chart in my note to Chaikin Analytics clients today. What we're looking at here is KIE, the SPDR S&P Insurance ETF, and you can see goes out on Friday at an all-time high. Nice, steady uptrend. If we wanted to draw the line here, we have a breakout, a retest, and then off to the races. What's interesting to me as well here is look at this money flow. Intensely bullish Chaikin money flow, signaling that investors are accumulating these funds and the stocks that are in it. And on a relative basis, we had a breakout, a retest, and now we're working higher once again. Insurance remains leadership. From a power bar perspective, when I look at those subsectors or those industry groups, KIE was at the top of the list when I left. It's at the top of the list when I come home. Remains a strong group, remains an area of the market where we want to be focusing for long ideas. And in particular, one of the names which I'm highlighting today, American Financial Group. Ticker symbol here is AFG. AFG is a very bullish Chaikin power gauge rating, closed at 105.75, outperformed the market on Friday. And we can see market model or an agreement here, bullish rating, outperforming, rounding out of an oversold condition with bullish money flow. Stock is above the rising long-term trend line, and it triggered a relative strength breakout signal here today. So with the stock triggering a breakout signal, we want to consider it on the long side of the portfolio. Interesting name to look at, American Financial Group. One of the names that's strong, leading stock in a leading industry group, outperforming the market, type of name we want to consider on the long side of the portfolio. So that is going to wrap it up for today. Head over to ChaikinAnalytics.com/today. Sign up for that email. You can follow along with this show. Daily stock ideas for you to consider in your inbox every trading day before the market opens. I am so glad to be back with you after being away for a couple of weeks. I will see you back here tomorrow. Have a great Monday, everyone.